also offering interest only for 10 years.
As far as the interest rate, or for the
Interest only, interest payment.
for the HELOC, or for the
Yeah, for HELOC.
oh, for the HELOC? Okay.
If we,
Yeah. Just to be, yeah. I don't know what they're, you know, I haven't dug into what our competition has over there, but we'll see. In general, we usually win, but sometimes, sometimes there's individual products that are better over there as well.
I'd ask the question, you mentioned something about the rates.
Mm-hmm.
What is the amount for a fixed rate? And do you give fixed rates?
Yeah, the fixed rates would be 4.25% for 30 years. That'd be a fixed rate.
What about the 15?
And that'd be 3.25 for 15 years. That'll also be a fixed
And also,
rate.
that's the follow-up question on that.
Yes.
If you have a mortgage that is fixed rate, can the person who has your mortgage change it without letting you know,
No.
changing it deductible?
No, they can't. Once you sign that note, legally, that's the agreement. Even if the bank got taken over by somebody else, they still can't change it legally. Yes. So that's, not that I'm starting any rumors, because that's not, I'm just saying that's how set in stone it is.
That's how much
Your
it's written in
agreement
stone.
cannot change, it would never change
Well,
too.
let's assume if it's two people, like husband and wife, one dies and the other one takes over and.
It still wouldn't be, no, it still would be the same mortgage note. That's also it's also recorded at the state too, in the government
Well,
level,
maybe the
so.
percentage is the same, but what about changing it from fixed to adjustable to
No,
something else?
there could be no change,
No
once you do
change.
that closing table, unless you refinance or do something different, or, there could be no changes in that loan.
Is it assumable?
No.
what was the question?
Is the mortgage assumable? Assumable means, that you could transfer from one person to another. Right now, our mortgages are not assumable, they're just for you. We're also getting on board with FHA as a product, but that really wouldn't, FHA probably wouldn't approve these buildings, so there are some loans we have that are assumable, but the loans that will be for here will just be for you. So if you sell, the person buying would have to get their own, qualify on their own with their own mortgage.
What is a conventional loan?
A conventional loan is basically what the guidelines that were said, that's your normal loan. Like, you're putting 20% down and you have your 30-year fixed mortgage, that's like a conventional, an example of a conventional loan, this commercial fixed products.
You mentioned in your talk, the word government came up a couple of times. What does the government, are there government programs that pertain to these buildings, like FHA or Fannie Mae or VA or anything?
Well, what eventually you want to happen, is that the government like Fannie Mae to approve the building down the line. Okay, once say the units are all sold, and there's different owners in most of them. Say most of them sell, and most of them aren't rented out down the line. Then the Fannie Mae, when I say the government, I usually mean Fannie Mae as a whole. They'll approve the building to be lent, to be lended.
Which means what?
Which means that Chase, Citibank, all those people that sell to Fannie Mae, all their loans could now lend in these buildings. It won't just be MGB.
One reason in particular is that Fannie Mae wants to wait till there's some experience as far as what the marketability of these places are. Hopefully it's going to be a lot. And I think that's there. I don't know how many years, but it's a couple of years probably.
Yeah, and how much gets, how much, who owns what percent they care about, They make sure it's like a solid, if you want to just use layman's terms, they're going to wait and see. They have the government has a wait and see approach, and looks at all the factors, 2, 5, 10, 15, 20 years from now, and see if fits into its requirements.
But is Amalgamated gonna also wait?
No, Amalgamated, like I said, we keep our own mortgages.
Oh, so
we're not
it
under the,
applies
that's
to,
this
like,
question that was asked before, yeah.
Citibanks and the Chases and.
Yeah, they have to go by the
Don't.
government
Ah,
laws,
I
because
see.
they sell directly to them.
I see.
Like almost all their loans go right, they sell them. Where we keep them all, like we literally give the 300,000 comes out from our bank
Got it.
to you, the mortgage stays with us through the whole 30
So
years.
what's happening basically, the Amalgamated or the other bank, National Co-op Bank, they're bearing the risk initially. Now, I'm sure you know that the FHA will not insure reverse mortgages on co-ops.
Correct.
Now, do you know, do any non-FHA, any sources of non-FHA reverse mortgages on co-ops?
I don't know anyone who does reverse mortgages on co-ops now. So, yeah.
They've
Right.
promised Congress many times they're gonna do it.
I haven't seen anyone do that, and I haven't seen anyone make that, I haven't seen any like hard money lenders even make that jump.
Because our representative, Carol Maloney, has led the charge by Congress to try to get FHA to buy reverse mortgages.
Right.
And
They still have
they
it.
refuse to do it, yeah.
I don't really see much difference between a condo and a co-op, to be honest, as far as the
The
risk,
difference-
but there is a little more risk.
It's got the
How often you
underlying-
get paid.
Apparently, the issue is, the basic issue is that the FHA wants to be the primary lender, and if there's an underlying mortgage, you're not the primary lender.
Right. You could end up really being in like third or fourth
Yeah,
position
and
with
they don't
those
want,
things,
nobody wants to be.
and they don't want that, so. Yes,
Yeah, just getting back to the pre-approved mortgage.
Uh-huh.
Like after the 30 or 40 minutes, do you get a number like right away?
what you would do, you would get a yes or no based on the information you
Right.
put in.
Right.
And then what we do is we work together and probably get you that number in like 24 hours.
Oh, 24 hours.
Yeah, so you would know, we,
You don't get it that day.
we
I'm
work
saying.
together
Oh,
and then
okay.
we get to get, and then
Right.
we could give you that number based on
Right.
that. And you won't have to put it all through again, we'll work on
Right.
getting you that number based on.
About
the things you
24
put in.
hours or something.
Yeah,
Right,
about
okay.
24 hours.
All right.
What type of information do you need for the pre-approval?
The pre-approval, usually your income, your credit actually gets run, okay, too. So that's another plus, by the way, which is a nice thing to get the pre-approval, because if there's some, there's a lot of mistakes on credit reports, okay? And we can get you that a copy of that credit report too, as well. And so that when it's time to go buy something, there's not a bill from, you signed for someone's your grandson's cell phone and he hasn't paid the bill, and you see it pop up on your credit and said, hey, what's this? Why is this hurting my credit? Okay, so you'll be able to get that as well. They'll also ask, questions such as what you think the proposed, maintenance would be on the property that you're, plan to get to help with those numbers. But really, it's generated in that way. The most important thing you have to know is really your income numbers. The debts that only matter are your housing debt and the debt that shows on a credit report. And then also tell us something if you're have to pay child support or alimony, things like that. That they're debts that you want to let the bank know about, because they'll come out, later. And all those things put together, they'll come up with a dollar amount, a payment amount that can work for you.
But that's also for a home also. It doesn't have to be just for,
Oh, yeah,
Yeah,
if the
okay.
home, co-op, it could be any of the three. I mean, and the combination, it's not an exact science, because like you said, you don't know, you might not know exactly what the maintenance would be, you might not know exactly what, the taxes might be on a certain property. But you guys might have an advantage in that way, because if you're looking at a specific building, you might know those specific numbers, where someone looking for a house in Long Island, one area over could make $1,000 difference a month on the taxes, but you should be able to get a pretty hard and fast number once you put it in.
And what's credit score are you looking at?
Oh, that's a nice question too. We go all the way down to 620 on our credit score. A lot of banks do 650. We can go down to 620, and for whatever compensating factor, because sometimes there might be unpaid medical bills, you know, that are on there that really lower people's credit. You know, say your insurance didn't pay something and you're fighting them, they throw it on your credit and it really wipes it out. We can overlook that and say, boy, that's probably costing them 30, 40 plus points. That's why we give that extra swing down to a 620 credit score. 740 as a credit score is kind of like that and above is considered excellent at the Amalgamated Bank. So if you're trying to work on your numbers or running your credit and seeing what that would be, if you're above 740, okay, and what we do is we do run the credit for all three, you know, Experian, TransUnion, and Equifax, all three, and we use the middle score in evaluating you. Okay, so that, yeah, go ahead.
How do student loans affect that?
The student loan would just affect, is it something that you're paying now or is it deferred? Okay, that would just be part of your debt. You know, like I said, I gave the example about, you know, if you're making $5,000 and your total debt is $2,000, that $89 or $129, whatever that amount is, would go towards that $2,000 over it and go toward your debt.
Many years ago, when I was paying off a mortgage on a home in Long Island, I learned that the earliest years of mortgage payment were almost entirely dedicated to interest payment, which made it tax deductible, which was nice. Is that still the practice?
That is still, yes, that's still the way a mortgage works, especially a 30-year mortgage, which probably will be in the ballpark of most people in this room will get a 30-year mortgage. The majority of your payment is interest, and that interest is tax deductible. So you'll see you'll get a big benefit of actually owning. That'll be one of the nice benefits tax-wise of owning, would be that chunk will be able to write off any incomes or any dividend income, interest income, all those different incomes, you could write that amount off, that mortgage interest off. On the 15-year, being at such a low rate, it's about even, actually a little bit more, right now, a little bit more goes to principal than interest. But if you think about if you have a payment of like $1,500, that's still about $700+ a month that's going toward that interest. So you'll still have a nice chunk, of, you know, in that example, of $8,400 at the end of the year that you can use on your taxes. Yes?
I have another question.
Sure.
You just reminded me. I had a co-op apartment in Brooklyn many, many years ago. I guess from 1986 or so into early 2000, I guess. I honestly, I can't remember. I ended up selling it.
Okay.
It was, I sold it probably 10 or at least 10 years, maybe 12 years ago. And I just went through the process of getting my free credit reports to
Okay.
check. And I realized that I don't even see that on any of those credit reports now. So that's a plus because I've owned a co-op apartment. I made my payments on time. Everything was hunky-dory and I sold it and it's gone. So is there a reason that that doesn't appear anymore, or is that something that you
It's
would
just
look
been
up in the?
something- Yeah, I mean,
Can you find that historically so that, you know, I get a plus mark
well,
on
the
that?
plus mark is actually going to be in your overall like credit score, because
Okay.
during that whole time of making those payments on time, it got your score up to where it is now. Do you know what your score is?
My score's around in the 800s.
Yeah, so you have nothing to worry about. That's put your score way up there,
Yeah.
and
No,
like
I was
said,
just curious because I didn't see it anywhere.
yeah,
And these,
once
I
it's
have all
gone,
these credit cards that
Yeah.
go back for 100 years or something, you know, but I don't see that one piece in there.
yeah, I mean, if it hasn't been recorded on for so long, you know,
It
that's
just drops
just,
off.
it just eventually drops off. But it doesn't hurt you, you know, that doesn't
No,
hurt.
that's interesting to know.
Yeah.